I will be sending you a brief research report on GNFC. GNFC, popularly known as Gujarat Narmada Valley Fertilizers and Chemicals, is engaged in operating businesses in the industrial chemicals, fertilizers, and information technology product space. The company is engaged in manufacturing and selling various fertilizers such as urea and ammonium nitrophosphate under the Narmada brand. By the end of this video, you will come to know 5 insights on GNFC which you did not know earlier. Insight number 1, market share. Coming to the market share, GNFC has 16% market share in AN melt, 15% in acetic acid, and 32% in aniline products. Insight number 2, revenue mix. Coming to the revenue mix, 70% comes from chemicals, 29% from fertilizers, and 1% from others. Insight number 3, GNFC has a healthy ROE of 24%, indicating the management is efficiently allocating capital. ROE typically is a quality ratio and indicates how good the management is in generating return on investment of shareholder money. An ROE of above 15 is considered good. Insight number 4, GNFC being a fertilizer company requires huge capex and working capital. However, it yet has been growing its free cash flows, which it has increased from 570 crores in 2019 to 1,829 crores in 2022, which is a good achievement. Insight number 5, market returns. As against a 5-year Nifty return of 88%, GNFC has underperformed and given a return of 33%. It has basically given better returns in the past 3 years with a 3-year return of 200%. In the past 6 months, it is down by minus 6.5%. Now let us go down into the details for GNFC. Coming to the sales, the turnover of the company has jumped from just 5,837 crores in the year 2018 to 8,642 crores in the year 2022. Also in the September quarter, the company generated a growth of 23.43% in sales. Coming to its net profits, the net profits have dipped to 238 crores, showing a degrowth of minus 16.2% year on year. With a zero pledge, this is a good sign for the company. Also regarding valuations, the stock is grossly undervalued with a price to sales ratio of just 0.88 times and P ratio of 4.62 times. The stock is attractively valued. Regarding free cash flow, the company has been steady and the free cash flow has gone up from 1,796 crores in the year 2018 to 1,829 crores. Also, the net profits have been quite impressive. From a net profit of 795 crores in the year 2018, it has jumped to 1,710 crores in the year 2022. This is a PSU company, and normally PSU companies trade at a discount to its peers. This is more of a trading stock. If you know technicals and track raw material and finished product prices, you can use it in trading. If I was a long-term investor, I would not consider this as part of my portfolio. Thank you.